This week could quietly shift the market trend, and most investors won't see it coming. Jobs data, mega cap earnings, and a Federal Reserve watching very closely are all hitting the market at the same time. How markets react this week could surprise a lot of people. No guaranteed predictions here. No hype, just probabilities, context, and what actually moves markets. Now this is important. Markets don't move on news. They move on expectations. Right now, market sentiment is cautiously optimistic but not confident. Stocks are near recent highs. But under the surface, investors are nervous. Hiring is slugging. Inflation remains sticky. And tech valuations look stretched. Crypto is holding its gains, but momentum has cooled. Commodities are quiet and waiting for clearer growth signals. Here's what most people missed. This week is about confirmation, not excitement. Last week, the Federal Reserve kept interest rates unchanged, but officials made one thing clear. UA, the labor market matters more than ever. If jobs weaken too fast, rate cuts become more likely. If jobs stay strong, rates could stay higher for longer. That's why Friday's jobs report is so important. And this could change market direction, but not for the reason most people expect. Let's talk about stocks. This is not just an earnings week. It's an expectations week. Major companies report earnings, including Alphabet, Amazon, AMD, Palantir, Disney, Uber, Eli Lilly, and Novo Nordisk. And this matters because markets are no longer rewarding good earnings. They are rewarding perfect earnings and strong forward guidance. AI-related stocks are still strong, but expectations are extremely high. AMD and Qualcomm influence sentiment around AI hardware. Palantir affects speculative tech. Alphabet and Amazon test advertising and cloud demand. If earnings beat expectations and guidance holds, upside remains possible. But even a small disappointment in guidance could trigger pullbacks. Here's the key detail. The market reaction matters more than the earnings report itself. Disney and Uber give insight into consumer strength. Pharma earnings matter for a different reason. Healthcare has quietly become a defensive growth trade. Eli Lilly and Novo Nordisk are not just stocks. They are signals about investor positioning and risk appetite. Watch how these stocks trade after earnings, not just the headlines. Now, let's talk about economic data, because this is where volatility usually starts. On Monday, we get the ISM manufacturing report. This shows whether factory activity is expanding or slowing. On Wednesday, we get the ADP jobs report. This often shapes expectations for Friday. And this is important to understand. Markets often move before the official jobs number is released. Friday is the main event. And the U.S. jobs report. Markets will focus on job growth, the unemployment rate, and especially wage growth. Here's what most people miss. Wages matter more than job numbers for inflation. If wage growth slows, expectations for rate cuts increase. If wages stay hot, inflation concerns return. That's where market volatility comes from. Now let's talk about crypto. Crypto is currently driven by macro conditions, not hype. If jobs data comes in cooler than expected, crypto could benefit. If the data is hot, short-term volatility becomes more likely. And this is important. Crypto isn't weak right now. It's waiting. Short-term direction depends on liquidity expectations, not headlines. A quick look at commodities. Gold reacts to interest rates and bond yields. Weaker data could support gold, while stronger data could pressure it. Oil is balancing global demand concerns with supply risks. Unless data surprises, commodities may remain range-bound. So here's what investors should watch closely this week. First, wage growth in Friday's jobs report. Second, earnings guidance, not just revenue beats. Third, how bond yields react after the data. And fourth, how markets respond after the headlines fade. Remember this, markets move on surprise, not news alone. Here's the realistic outlook. Stocks may see upside, but volatility risk remains high. Crypto stays sensitive to macro signals. Commodities are waiting for confirmation. This is a reaction week, not a conviction week. Big moves often happen after clarity, not before it. So now, I want to hear from you. Do you think this jobs report helps markets or adds more pressure? Share your view in the comments. I read them all. If you found this helpful, like the video, subscribe, and I'll see you in the next market breakdown.